Hello and welcome. You've tuned into Business Lunch. I'm Nisha Podar and with me today is Mangalam Malu. Mangalam, good afternoon. There's some green on the screen after the hard knock that the market got yesterday because of the coronavirus scare, which is really continuing. So today also, markets not that great at the moment, flat to just about in the positive territory, but definitely had been off the lows, but now trending towards that again at lunch hour. So we need to see whether a trend reversal is in sight from lunch hour onwards when we look at the bigger picture in the markets. Overall, if we look at the bigger picture in terms of the wider markets, well, the mid-cap index is underperforming. The key indices has slipped into the red right now, while Bank Nifty is in line as well. So the big boys like Reliance Industries are the biggest draggers, and it's a tale of two cities when it comes to the HDFC twins, one on the positive and one on the negative. So the IT counters like TCS along with the banking counters like ICICI Bank are really contributing well to the overall market. But as you see, the overall health of the market definitely on the declining side. Mangalam.
Absolutely, there are more decliners than advances in today's trading session, and just as we speak, absolutely flat for the Nifty, has been in that range of 11,880 to around 11,810 all through the trading session. And we have the mid-cap index also underperforming, but a few stray stocks doing exceptionally well in trade. Phoenix Mills is the one that comes onto my radar, a fair amount of volumes added on that, and that stock is higher by almost 10% in an otherwise weak session. We have Vodafone Idea as well, higher by almost 6.5%, and Bajaj Electricals from the small cap space, small and mid cap space, moving higher. So a handful of stray stocks indeed doing well. Let's see where they go from here. But the big news, the Financial Action Task Force has put Mauritius in the grey list. A short while ago, the SEBI has issued a clarification on this grey list status. Surbhi Upadhyay is here to explain what exactly this means. Surbhi.
Well, yes, there is a clarification that's coming from the market regulator, but at best, it's a partial clarification and it doesn't answer some critical issues. Anyway, let's just go over the matter. What is this grey list? The Financial Action Task Force has placed Mauritius in the grey category, which basically means that Mauritius now comes under increased monitoring. SEBI has simply gone back on definitions that are given by the FATF itself. Let's see what SEBI's clarification is saying. SEBI is saying that grey-listed countries come under increased FATF monitoring, which is a fact. The market regulator is saying that stricter rules need to be applied, or higher due diligence needs to be applied only to blacklisted entities and not necessarily grey-listed entities. Which are the blacklisted entities? These are jurisdictions which are involved in perhaps terror financing and other regulatory issues as such. So Mauritius is not blacklisted; it's grey-listed. Now, going back to what SEBI is saying, it's essentially saying, let's pull up the quote. When a jurisdiction is placed under increased monitoring, i.e. the grey list, it construes that the country has committed to resolve swiftly the identified strategic deficiencies within agreed time frames. Now, this sounds like a mouthful. Essentially, SEBI is citing FATF and is saying if someone's in the grey list, they've actually complied or agreed to comply to higher scrutiny. So there is no need to step up your due diligence against them. SEBI goes on to say that FATF does not call for enhanced due diligence on grey jurisdictions. And ultimately, the most important operative line, we should pull up the next quote now. SEBI's press release ends with this line and it says, therefore, FPIs from Mauritius continue to be eligible for FPI registration with increased monitoring as per FATF norms. Now, this statement itself leads to some other questions. First and foremost, increased monitoring. Does it mean that for new registration, SEBI is going to come out with a new set of rules, higher compliance? And more importantly, what happens to existing entities which are coming from Mauritius? Remember, the country, that's India, changed its FPI regime in September last year. So most of the Mauritius entities anyway have slipped from category 1 to category 2. Higher compliance burden coming in. But will they now be allowed to trade further? Can they take fresh positions or not? This is an important matter on which the SEBI press release is still silent. Market participants want to info, would like to believe that this press release means that for now it's business as usual till another circular or release comes in from the regulator explicitly banning trades from Mauritius. That has not happened as of now, at least.
All right. Thank you so much, Surbi, for putting all that into perspective. Of course, it's a big issue and needs a lot more clarity going forward as well. Now, let's focus on the taxation on REIT and InvIT side. Now, remember, just to give a background, the proposed changes in the union budget with regards to the dividend distribution tax, which were taxed in the hands of the recipients as per the new proposal, had made REITs and InvITs taxable now, which were earlier not taxed, giving or making these structures much more lucrative for the investors. So after hue and cry from the industry, our sources do tell CNBC-TV18 that the government is likely to give that tax relief which has been asked for by the industry on account of the DDT liability for these REITs and InvITs. It's a much needed relief. Timsi Jaipuria joins us with exclusive details on what's on the anvil. Timsi.
Well, what we are given to understand from sources is that after receiving a lot of representations and understanding the earlier taxation structure for REITs and InvITs, the government seems to be convinced with the issues that were raised by REITs and InvITs and these funds after the budget's proposal to shift to the classical model when it comes to dividend distribution tax. That is, the tax liability should be in the hand of the recipient of the dividend. And what we are given to understand is that the government is on board with the tax concerns raised by REITs and InvITs. Also, government is assessing now its options, how best to give forward this relief which is due to both REITs and InvITs. What we are understanding is that either government can come up with an exemption which could be in the form of a carve-out, or just clarify its stand that when it comes to REITs and InvITs, this shift in the classical model of DDT should not be applicable. Now, exactly what position government takes is something that we'll have to wait, because sources indicated that the government is still discussing these options with the stakeholders, with the law ministry, with the Central Board of Direct Taxes as to what is the best way when it comes to legally, when it comes to the language of the entire proposal to give relief to REITs and InvITs, and that will be actually given out by the finance minister when she replies to the budget debate in the second session of the budget session, which is expected to start on 2nd of March. So a relief definitely in the offing is what sources are indicating, but in what form is what we'll have to wait and hear from the finance minister herself when she replies to the budget discussion in the budget session's second part. Let's see what is the final outcome, but yes, a relief definitely is in the offing. Back to you.
Timsi, thanks a lot for that. Meanwhile, the stock which is on our radar getting clobbered in trade right now is Interglobe Aviation. The intraday chart should tell you that it's down almost 6.5%. Most of that coming immediately on account of the money control exclusive. Money control, our sister concern, has broken this story where sources say SEBI has found undisclosed related party transactions at Indigo in a preliminary inquiry. Money Control's Tarun Sharma, who broke this story, joins in with the details. Tarun, what exactly are you gathering and what is it that the company is saying?
Yeah, Mangalam, I just want to tell my audience that the Security Exchange and Board of India, SEBI, has completed their preliminary inquiry, which has been initiated after the Rakesh Gangwal complaints to the SEBI chairman. And in that preliminary inquiry, they have found some undisclosed related party transaction between IGE, that is Interglobe Enterprises, which is who is the main shareholder is Rahul Bhatia, and Indigo. So they have found many undisclosed RPT transactions between the IGE and Indigo, and the threshold of that transactions are high, and it was not cleared by the audit committee. So the SEBI is now taking up this matter to the CIDC, that is the Committee of Internal Division Chief, for future action. So now we are gathering that the CIDC will take a call whether they want to do for the forensic audit or they want to go for the adjudication process. So it will take time, but certainly the matter is in the court of the CIDC.
All right, Taru Sharma, an important story at that. Remember, warring promoters and the outcome of those investigations. Of course, investigations go on and actions in future as well. We'll keep an eye on that. Now, as we slip into a short breather on Business Lunch, here's a look also at the top stories on Money Control Pro today. Why is the street turning wary again? Another one today is Ujjivan Small Finance.